Okay, now let us know how to prepare the financial statement. Right, so based on the illustration in the books. All right, preparation of pre-adjusted financial statement. Okay, so the following is an example how to prepare pre-adjusted financial statement from a given trial balance. So what the question gives you is a trial balance here. So illustration below is the trial balance of Marine Enterprise is at 31st December 2018. So we are being given the trial balance. And then you are required to prepare the financial statement of profit or loss for the year ended 31st December 2018, and we also have to prepare the statement of financial position as at 31st December 2018. So two things that we have to prepare. Number one is statement profit or loss. The other one is statement of financial position. So this is the question. So this is the trial balance given is at 31st December. So we are giving all the items, all right, fixed and features, motor van, bank, long-term loan, and etc. The first thing what we have to do if we are being given this trial balance, we have to classify the item. So the item which falls under category of statement profit or loss. So statement profit or loss. So it should be categorized under revenue and expenses. So we have to classify under this. And the other one are statement of financial position. We have to classify into the capital or honest equity, and then we have to classify in liability and asset. All right, so we have to categorize in these 5 category first before we do our statement profit or loss and statement of financial position. All right, so fixtures and fitting is our asset, or basically monitor is under non-current asset. All right, number 2 is motor van. Motor van is considered as non-current asset. Bank is categorized as current asset. Okay, so this one non-current asset, current asset is actually falls under the statement of financial position. Long-term loan is actually for the liability or non-current liability, be specific. Purchases will be in our expenses, right? So this is our expenses. Sales also in our statement of profit or loss, but this is falls under revenue. Account receivable is our asset, so it falls under current asset. And then account payable is our liability, so this is under current liability. Drawing, it falls under, it comes together with, it will reduce our capital, right? So it's going to be together in our capital. Insurance is our expenses. Insurance is our expenses. Okay. Salaries and wages is our expenses. Carriage inward is our expenses also. But please do remember, carriage inward is expenses, but we have to put it under cost of goods sold. All right, carriage outward is also our expenses. Water and electricity is our expenses. Duty on purchases also is our expenses, but this one we have put together inside the cost of goods sold. And then return inward, it will reduce our revenue because our customer return back to our goods to our company. All right, so this one, it will reduce our revenue. Commission received, so this one is our revenue. Discount allowed is actually our expenses, but this one we have put together inside cost of goods sold. Opening capital, so this one should be in our statement profit or loss, and this is our capital. Alright, so now we already categorize under revenue, expenses, and then capital, liability, and asset. So after we already studied on this one, we already classified for this one. Now is our time to prepare our statement profit or loss. Alright, so statement profit or loss, as we know, as I would like to mention you earlier. Alright, before that, I forgot to inform you, we are being given also the inventory. So inventory at the end is going to included as our current asset. Okay, so the opening inventory will be in our cost of goods sold. Okay, so now we move on. All right, so from here we can see that we have to prepare our marine enterprise, and then this is the statement profit or loss for the year ended 2018. All right, sales. So first one is sales. So where is our sales? So we can see here. All right, sales is here. So this is our sales. So once we taken our sales, we can cross it to make sure that we already took that one. So this is our sales of 250,000. Alright, so sales we have to less with return inward. So return inward here. So the cost is 450. So still less sales return inward. And then we have to less with our discount allowed. Same also, discount allowed is our expenses. So when we give discount to our customer, it will reduce our sales. So where is our discount allowed? Okay, this is our discount allowed, and the figure is 1270. So this is our discount allowed, 1270. So we should take our sales minus with return inward 450, and then reduce with the discount allowed 1270. So our net sales is 248,280. So next we are going to less with our cost of goods sold. So cost of goods sold is our opening inventory. And please do remember, the opening inventory is going to be given in our try balance. So our opening inventory 15,000. So less cost of goods sold. Now opening inventory 15,000. All right, and then we have to find our purchases. So where is our purchases? So this is our purchases, and then purchases of how much of our purchases is 55,000. So purchases 55,000, and then if we have the return outward, we have to minus from here, but now we don't have the return outward. Okay, so the net purchase is 55,000. And then we have to add with expense on purchases. So what is expense on purchases? It's actually the cost that we have to incur. It will increase the value of our purchase. All right, so what will the expenses that will increase our purchases, which is carriage inward. Carriage inward of 600. Now we add with our carriage inward 600. What else? It will increase our purchases. Alright, so the other one is duty on purchases of 3,600. So we add on with our duty on purchases 3,600. Is there any other things that will increase on our purchases? No, this only two, carriage inward and duty on purchases. Right, now we have to calculate our cost of good purchase. So we take our 55,000, our net purchase, and then we add with 600 and add with the 3,600. So cost of good purchase is 59,200. And then we have to less with our closing inventory. So in the question, where is our closing inventory? So this is our closing inventory, 13,000. So we less of our inventory, 13,000. So after we get it, our opening inventory plus with the current good purchase of cost of good purchase, now we get 74,200. And then we minus with our closing inventories 30,000, and our cost of goods sold is 61,200. How to get the gross profit here? So this is our net sales. We minus with our cost of goods sold here. So this is our gross profit, 188,080 ringgit. So after we get our gross profit, we have to add with our revenue. So our revenues here is actually other revenues that we are going to receive other than our normal trading. So for example, if we have the commission receive, rental receive, whatever receive that we are going to receive is actually falls under revenue. Now we look back at our trial balance. So what else that we have here? All right, if we just go through, nothing much that we receive here. Other revenues is only commission receive of 3,500. So now we add on our commission receive, 3,500. And then we have to less with our expenses. Please bear in mind all other expenses will be in our expenses in statement of profit or loss. Now, we look back at our trial balance. So what is our expenses? So our expenses is insurance. So this is our insurance. So we have to put in here insurance, all right? Salaries and wages. We have the carriage outward. We have water and electricity. Okay, so all these kind of expenses, so we put in our expenses over here, right? Salary 20,500, insurance already put it, and then water and electricity, and also our carriage. Now if we like to see is there any other expenses that we forgot, so nothing, so everything has been crossed off. All right, so we look back at our expenses. So we have to total up our expenses here, 20,500, 4,600, 42,000, and 980. So our total net expenses is 68,080. So now our gross profit here, we have to minus with our, okay, so we minus here. Now we get our net profit, 122,500 ringgit. So this figure we are going to bring to statement of financial position. Alright, so next what we have to prepare is our company Marine Enterprise and then statement of financial position as at 31st December 2018. The first thing what we have to put in is our non-current asset. And please do remember our non-current asset, we should have cost, accumulated depreciation, and lastly will be our carrying value. Right, if we move back on top of our question, so what we have in our non-current asset, so we have fixtures and fitting over here, 30,000, right, 30,000 here, and then we have motor van, 40,000, Okay, so in this our trial balance, we don't have our our accumulated depreciation, so we just put our motor van and fixtures and fitting, and the cost is 40,000 and 30,000. There is no information on accumulated depreciation. So if we later on, if we do our adjustment, so we have the accumulated depreciation and depreciation, so we have to put in. So our carrying value, how to get the carrying value? So the 40,000 minus accumulated depreciation, we are going to get our carrying value. So this one is total of our non-current asset, which is 70,000. So next, what we have to do is to list on our current asset. Now we have to look back in our question. So what is our current asset? So current asset, we have bank over here, all right? And then we have what else? So bank, we have 155,000. And then the other one is we have account receivable, and the figure is 25,000. So we put over here, we have our bank 155,000 and account receivable 25,000. And please bear in mind our information, we have the closing inventory and the value is 13,000. So this one also it falls under closing inventory of 13,000. So if we total the closing inventory of 13,000, the account receivable 25,000, and also our bank account 155,000. So this is our total of current asset, which is 193,000. So this one we total up the two over here. So this is our value of asset, 263,000. So the next one, what we have to do is our owner's equity or our capital. So this is our capital at the beginning at 1st January 2018. Now we look back in our question, where is our capital? So capital in our trial balance is actually given in our trial balance. So this is our capital, so 116,000, right? So we put here 116,000, and then we add with net profit. Where to get the net profit here? So net profit is come from our statement profit or loss, 122,500. So here 122,500, and then we less of drawing. All right, so this drawing we can get from our trial balance. So this is our drawing, and the figure is 8,500. So have a look back, our drawing is 8,500. So this is our capital at the end of the year, or capital as at 31st December 2018. So we take 116 plus with 122,500 profit, and then we minus drawing. So we got 230,000. Alright, so the next step, what we have to do is to list down our non-current liability. Come, we look back at our trial balance. So what is the figure of our long-term loan? So long-term liability or long-term loan. So this is the figure of 15,000. Right, so we have our long-term loan of 15,000. So if we have more than one, so we add up, but in this question we just only have one. And then we also our current liability. So current liability, come we look back at our trial balance. So what else except for the account payable? So account payable of the 18,000. So our account payable here, we write it down, account payable 18,000. So this is 18,000. So what we have to add up is our capital 230,000 here, plus with our long-term liability 15,000, and then we add with our current liability 18,000. So this is the total of our capital or owner's equity plus liability, yeah, which is liability for the long term and short term. So this figure of the asset and this figure of our capital and liability should be equal. All right, thank you very much.